What's the most tax efficient way to structure the purchase of Canadian investment property if I am Canadian? So from the inside.
Okay, yeah. Okay. If you're a Canadian, there's two approaches that people do take, depending on the amount of the properties. Like if someone is investing in one rental property, two or three, then you're better off going personally, because what happens is in most cases, given the mortgage and the interest rates and the property tax and everything, your net revenue from the rental property would be zero. So you don't have any tax implication. But and it also benefits from getting your bank financing and everything along those lines when you do it as an individual. So for the first few properties, two or three, once clients say that we want to get a lot more and it reaches about 5 or 6 or something, then we say put it through a corporation. It's a real estate corporation. The key thing to remember when we talk about putting money into the real estate corporation and renting investment property through a corporation is that because it's considered passive income, so the tax rates are the corporation is taxed at a higher rate, so the corporation does not benefit with the lower tax rates that normally it would be benefiting by. Okay, so Cole, your insight, please.
Yeah, I mean, from a tax perspective, yes, Bala, that's what it is. So mortgage is an important factor, Darren, and the tax rate, the mortgage, the interest rates offered to individuals are generally lower than what they offer to corporations. So that is one of the factors. Not only from when we have to advise, we look at it from not only purely from a tax perspective, but from other perspectives as well. And as Bala rightly mentioned, if there are 5, 6 properties, then you may want to consider it buying it through the corporation. But if it's 1 or 2, then it'll. So if the person, the capital gains are exempt for one property which the person claims as their personal primary residence. So if you're buying 1 or 2 and then you are interchanging between a primary residence between one or the other property, so with a corporation that again would not be there. So our thumb rule would be that if you have number of properties more than 4 or 5, then you may consider buying it through a corporation. But if there are lesser than that, I think you shouldn't really mind about a corporation. Under the personal name is a better option there.
There's something else also to consider, because when you're having more than 5 properties, it helps in succession planning when you're putting it to the corporation. That's one thing. And second thing also, if the property is purchased from a builder, then there is HST or the GST that's applicable on the property because the builder is selling the property. So there is a rebate mechanism that can be used. So if you're buying the property for your own purposes, then you get a rebate for it if you're living in there. But also for rental properties, you get a rebate, GST rebate that can be filed for. Now, if that is going to go through a corporation, then you lose out on the rebate. So these are various considerations that people have. So you got to almost look at the cost-benefit analysis. Does it make sense?
Absolutely. Thanks a lot for that, gentlemen.
So if you're a 6, 7, or 8-figure investor, entrepreneur, or business owner who needs a tailor-made solution from a qualified team of professionals, we can help you achieve the international lifestyle, the freedom, and even the tax savings you're looking for. Visit us at htj.tax and live that international life.